So there are some ETFs within Australia that pay you dividends every single month. This can be very handy if you're trying to build monthly income with your dividend portfolio. Now, sure, you can curate your own dividend portfolio, bringing in companies that pay different months, which is what I like to do. But if there's an ETF that pays monthly and makes it easier for you, it might be worth looking at. So I've researched a few, and so I'm going to share them in this video. We'll look at their dividend yields, we'll look at the past performance of the fund overall. Now, just a quick disclaimer, this is informative only. You'll need to make your own decisions when making any financial changes. Let's start with EIGA, the eInvest Income Generator Fund. The market returns over a 3-year period averaged 7.32% per annum. The top 5 holdings make up 37% of the fund, so quite a large portion of the fund with the top 5 companies, and that is BHP, National Australia Bank, Commonwealth Bank, Westpac and Woodside Petroleum. The dividends or distributions have been falling over the years, so take that into account. But the 12-month distribution yield is currently 7.1%, which is actually pretty high and not bad for a monthly ETF with a 75% franking level. So you do get those franking credits. Next, let's do SWTZ, the Switzer Dividend Growth Fund. The 3-year market return, the percentage is 6.33% per annum, which is good. It's got 100% franking, which is great. The top 5 holdings make up 34.9% of the fund, again, quite high and very similar to the last one. We've got BHP, Commonwealth Bank, Westpac, Spark New Zealand and Telstra. The distributions have been dropping since 2019. Again, take that into consideration. Their distribution yield is a bit lower than the rest at 3.13%. Let's look at HVST, Betashares Dividend Harvester Fund, quite a controversial dividend fund. Now, they have recently changed their strategy as of a few weeks ago, so going forward might be quite a bit different than the past performance. If we look at the performance, it's only made 1.16% return over the last 3 years per annum. And very often, even before that, it was actually going down, which is why it was considered quite controversial because the capital growth was going down while the dividends were going up. The top 5 holdings have actually changed, and this is what it is currently with the new system. Now they're holding one of their other funds, the Betashares Australian 200 ETF. They've also got Macquarie Group, National Australia Bank, Westpac and ANZ. This is subject to change, though. They are buying and selling quite often, so the stocks that they hold or the companies that they hold at any one time is changing every 2 to 3 months. And the distribution yield is 6.2%. Now, I'm interested to see with the changes that they've made, how different that's going to be for capital growth. I expect it to be much better for capital growth, but it's interesting to see what will happen to the distribution yield now. So that's the 3 biggest of the monthly ETFs. That's EIGA, which has a dividend yield of 7.1% and an average 3-year return of 7.32% per annum. SWTZ, which has a dividend yield of 3.13% and an average 3-year return of 6.33%. HVST, which has a dividend yield of 6.2% and an average 3-year return of 1.16%. But there are a few smaller ones, which we'll just briefly look at now. So I've got 8 more. Here are the first 4. I got the dividend yields from the ComSec website and the amount it has increased or decreased from Google Charts. So we have PL8, Plato Income Maximizer, with a dividend yield of 4.2%. It has increased 10.19% over the last 5 years. QRI, the Qualitas Real Estate Fund, it has a dividend yield of 6.1%, although it has decreased 17.07% over the past 5 years. GCI, Griffin Capital Income, dividend yield of 2.7%, but it has decreased 0.75% over the last 5 years. And MXT, Metrics Master Income, dividend yield 2.7%, and it has decreased 3.41% over the past 5 years. The last 4 are all from Betashares. We've got HBRD, which is the Active Oz Hybrids Fund. The dividend yield is 2.5%. This time I just used the chart on the actual Betashares website and a total 3-year return of 4.95%. There's CRED, Betashares Australian Investment Grade Corporate Bond Fund, dividend yield of 5% and a total 3-year return of negative 9.57%. BNDS, Betashares Western Asset Australia Bond Fund, the dividend yield of 1.5% with a total year return of negative 8.74%. And the last one, QPON, the Betashares Australia Bank Senior Floating Rate Bond Fund, dividend yield of 0.8% and a total year return of 2.52%. I forgot to film an outro, so let's do it now. So we've been talking about ETFs that pay monthly. Now I prefer to do it with actual companies, but I think an ETF can be a really simple way to do it. If I was going to do it myself, and this is not a recommendation, it's just what I would do, I'd probably go with one of the larger of the monthly ETFs rather than the smaller ones, just so there's enough volume and I feel that they're more stable. And I would be looking at both what the dividend yield is and the capital growth on the fund. But that's what I would do. I hope you found this information useful. Anyway, have a great week and I'll see you in the next video. Bye.